Good afternoon. You're watching Business World Live. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Thursday. All right, shares today just unable to hold through, inching lower from the get-go. The PSEI on a 1.3% slide today, sinking to 719.18. Offshore investors still dumping local stocks for the 17th day now. Net sales for Thursday at 808.8 million pesos. So far, the PSEI has tumbled 5.9% this year. This is foreign investors unload local shares that's amounting already to $750 million. Compare that to total net sales of $2.5 billion in 2020, according to Bloomberg. The recent exodus was pushed by foreign investors' block trade sale of more than $200 million in PLDT. But one other reason for the plunge, possibly here, the trading suspension of Abra Mining. Recall that the miners' trading activity was put on hold beginning March 4th for alleged violations such as the trading of an issued and unlisted stock. Abra Mining had a 77% share of daily transactions on the bourse prior to the suspension. Rachel Cruz of AP Security says the suspension exposes the risk of speculative stocks. For now, let's move to more earnings report here, this time from Ayala Corporation. Core net income of the conglomerate falling by 16% to 26 billion pesos for full year 2020. This is a pandemic-induced restrictions impacted their businesses. Net income also declining by 51% to 17.1 billion pesos. The effect of restrictions felt across all business units here for Ayala Land. In fact, net income was down by as much as 74% to 8.7 billion pesos. The same can be said for Globe, with profit declining 16%. Lender BPI also had lower profit for 2020, down 26% to 21.4 billion pesos. Same thing for AC Energy, with net income coming in at 6.2 billion pesos, and AC Industrials with a net loss of 1.8 billion pesos. But quarter on quarter, profit jumped here for Ayala Corporation 69% to 5.8 billion pesos. They're taking that as a sign that consumer confidence is recovering. Moving forward, the conglomerate is ramping up its war chest as it boosts spending by 29% to 196 billion pesos. Investments, of course, are going to focus on property, banking, and their telco businesses. So far, at least on how they close for Thursday, Ayala Corporation here is down by as much as 0.8%, now priced at 773 pesos a share. Now, off to some better earnings numbers here. You have this time from Nickel Asia. Net income for 2020 is 52% higher to over 4 billion pesos, make that close to 4.1 billion pesos. This despite exporting fewer ore, which is down 4% to 10 million wet metric tons. Profits still managed to climb as prices of ore export rose by 45% to $33.99 per wet metric tons, or WMT. Now, President Martin Zamora says the higher prices was brought about by the continuation of the nickel ore export ban in Indonesia. Looking at how Nickel Asia at least performed for today, look at them. One of the stocks here that's in the green, the stock edged higher by 7.2% today, now valued at 5 pesos and 50 centavos a piece. Now, here are other headlines we're keeping our eyes on. Metro Manila Water concessionaires will be implementing adjustments in their service charges this second quarter. Manila Water customers can expect a 5 centavo per cubic meter increase in their monthly bills, while Maynilad will be lowering their charge by 1 centavo per cubic meter starting April. Manila Water customers consuming 10 cubic meters or less will likely see a 27 centavo increase in their bill per month, unless they are lifeline consumers. Now, for those consuming 30 cubic meters and above, they could see increase of as much as 1 peso and 22 centavos in their monthly dues. For Maynilad customers with the same consumption, a 20 centavo decrease in monthly charges can be expected. The MWSS says the adjustments were due to the foreign currency differential. The regulator explains Manila Water's price hike was due to its existing yen and euro denominated loans where peso is the weaker currency. Maynilad, on the other hand, has more US dollar denominated loans as peso strengthens against the greenback. Now, a House panel approved on Wednesday a resolution declaring a housing crisis as stockpile for next year proves to be inadequate. The House Committee on Housing and Urban Development urged the Department of Human Settlements and Urban Development to use idle government land and fast-track socialized housing programs for the poor. The House panel says such move will help contribute to economic recovery. At least 700,000 housing units were constructed from 2016 to 2020, far from the estimated demand of 6.7 million housing units by 2022. The government has allocated less than 1% of the national budget for housing over the last decade. All right, foreign investors holding off on cashing in on the Philippines FDI fell to a five-year low in 2020 to $6.5 billion. What would it take to regain the country's attractiveness as an investment destination? To talk about that, we have economics professor from the University of Asia and the Pacific, Professor Ronilo Balbiran. Good afternoon, Prof.
Good afternoon, Jeff.
All right, so taking off from that, you have 2020 FDI at a five-year low. December output alone shows a 62% decline. What does that say about the country's prospects now as an investment destination?
Well, number one, understandably, that the foreigners are holding back on their investment decisions. But I think this is, those numbers are numbers of the past. So I think that's past is past. But we have to take a look at the overall investment environment of the Philippines. So if we are to search for some glimmers of hope for this particular year, I think we should only we should be distracted with the numbers that BOI is actually posting. So whereas you have the actual foreign direct investments going down, which is understandable, but take a look at the 156% increase in the investment pledges in the first 2 months of this year. So pointing towards the prospects of our investors, especially domestic investors, looking past this pandemic. So and they are already placing their bets towards this what I call post-pandemic favorites. No, so they are starting to build energy, transportation, tourism. So I think once we realize all these investment pledges in the next several months, then the foreign investors should be able to notice this particular strength of our economy, that our fundamentals are still intact, and that certain key policies are being legislated already. So we look forward to the actual signing of the create law. That's very important. So the elements are there, no, towards already betting on the future of our economy. And what a good way to start the first 2 months with domestic investors really betting on our country, and that should give a boost to our foreign investors. Come on, the worst is over. We can restart from starting this year.
But having high investment pledges is one thing. Having them actually realized is another. Do you really expect these investment pledges rather to actually come to fruition?
Yeah, I think because these pledges have different timelines. So one for uh, very short projects like yung mga nasa mga housing. So we can already see pledges in different types of investment products. So housing, resorts and hotels, transportation. So I think this can be realized in the next 3 to 6 months. The long gestation investment items there would just be the one of power, which is understandable. You need 2 to 3 years, no, to really accumulate your resources to really start and get rolling with your investments in power. But I think with what we are seeing now in the power sector, that this is still a bright sector, and that it has maintained its brightness during the pandemic. And so, what more uh, can we expect once our economy has fully recovered? So, I think the timing is just right for these energy investments coming in. And in the next 2 to 3 years, just when our economy has actually fully recovered, and then that's the right timing for all these energy investments. So I think overall, so we have some short-term challenges in the actual quarter of our recovery, but I'm happy to see these numbers and these sectors, these types of investments that are actually betting on our future already as early as the first 2 months of this year.
But when exactly do you see recovery happening? I mean, I would think, at least give us an idea, and how much of foreign investor interest would actually latch on the economic recovery of the Philippines?
I think what's holding them back, aside from the pandemic, is that the national election is too close. So
Mm.
so there might be some changes there. So once we have clarity on, I think they will start coming back after the elections. So we will
Mhm.
start fresh with the new leadership, and then by that time, all the domestic investors have been have actually rolled out their investment activities for the next few months. So it's I think very easy. We can see that the foreign direct investments we should be coming in towards the second quarter, third quarter of next year. But of course, just because of base effect, we should be able to see some improvements in growth rates this year pa lang, on the third and the fourth quarter of this year, especially fourth quarter of this year.
But do I take it to mean, sir, that FDI would, in a way, still turn out to be weak for the remainder of the year, given
Yes,
your
yes,
assumption that they're holding off on investments prior to the election?
yes. Especially that there is no clarity yet on when do we open up fully the public transportation. The public transportation remains to be the critical item for pushing the construction industry. So, construction industry, the mother of all industries, has been lagging behind, has been slowing down, and that is partly because of the lack of public transportation. You need a lot of those construction workers moving into the project sites. So that, I think, the critical factor there for the timing of our recovery, I think now hinges on, well, we have been talking about the vaccine rollout, but number two is actually letting go of our public transport. That's the timing variable.
Interesting how you mentioned that. Does that also factor in to the country's manufacturing activity that has been on an 11-month decline? Why is that? Given that restrictions have been slowly easing, does that not translate to increasing factory output?
Yes, especially that our manufacturing sector is not fully, not fully automated, not into robotics. So
Mhm.
you need a lot of labor, actual physical labor, to actually push our manufacturing industry. So unless we figure out a way of opening up public transport without actually putting our laborers in danger, then we can expect that the manufacturing sector will still struggle to recover.
All right. At least not no clarity yet inside there for the manufacturing sector. Professor Balbiran still expecting the sector to at least struggle in the near term. Thank you very much for your time this afternoon. University of Asia and the Pacific professor, economics professor, that Professor Ronilo Balbiran. Thank you, sir.
Thank you, Jeff.
And those are the biggest news this trading day, March 11, 2021. again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.